Okay, so after a while I managed to got some time, and then let's see what's happening. Whoever is here, let me know in the chat so that I can actually interact with you guys. Okay, and let me just pop out my YouTube chat as well so that I can read your comments while looking into the chart. Okay, someone is too eager to. Okay, ESG is crossing 4393. Are you serious? It already came there for the sell side liquid. Oh shit, bro. This one I just put during my work. I didn't do any framework, anything. I just put it here and I set an alert at this level that price gonna come and grab these areas, and that's why I had some alerts over there set. Okay, so that's what it actually did. There is nothing regarding the execution or anything. I just wanted to see like what's happening during this moment. So that equal low is already taken. Unfortunately, I mistakenly had, let me put you something, exchange. Can I see it here? I think US 500. If I search like that and then paper stone, yes, this one, index, I had this drawn over there, as you can see on the index. That's what I draw on a different, like I was looking into the paper stone, and I have my live account with them that I was planning to start soon. But planning to start means like I have deposited the fund over there and I was planning to trade with them, but unfortunately they don't have any future contracts. So since there is no future contract, I don't think it's a good enough option for me. So yeah, I just came to this chart, draw for these levels. So this is Asia sessions low, this is a low that formed during the Asia session, but this is actually the London session low. So the exact equal lows are on the London sessions low, and that's what I was looking into, like price gonna come down to here. Although I was expecting this 1 hour's relative equal buy side liquidity to be grabbed, although it already grabbed a very good area of liquidity from the left. If I go to, let's say, 1 hour, and you will see like there are some other highs as well. So it grabbed this one, let me put a mark, but I was expecting it to go up to that far. Okay, that's why I did not look. You see like that one is taken already, the buy side liquidity. However, it didn't go to the other high that I actually draw the line from. So a reversal was expected, and this is a trade that I took yesterday, if I'm not wrong. Let me go to that area as well. So let me just put on the replay mode so that I can go there quickly, and let's see if the 1 minute data is available for that or not. Where is that? Where is that? Don't tell me it's that far behind. Where is it? Is it inside of my replay or what? So what is that buy setup that I marked? Okay, so in 1 minute it won't show me that, I guess. So let me go to the 5 minutes and let's see. Yeah, so in 1 minute, since I'm using the, where is it, let's go to the account and billing, leave, yeah, let's leave this one. Yeah, so that's the current plan that I'm using. Just have like 377 days left with this current plan. So yeah, I mean, I always remove the auto renewal because I want to, like, if I remove it when there is, like, when it's about to finish, they're gonna give me around 50% or 2 months 3 months for free. So why not doing that? Okay, auto removal, they don't give any offer. Okay, that's why I just removed it. And as you can see, like, I've been doing this for a long time. So let's see, like, what's happening in the market. Although today I'm gonna talk about a few other things. Welcome Murad Hossein, brother, and I was expecting you. So let's see who is here. I can see the participants, although, guys, say hi in the chat so that I can know that you guys are actually, like, who's here. Okay, so say hi in the chat. And on my last live, like, I'm sorry that I'm not getting enough time or opportunities to upload more videos on my channel. I have recorded a lot of videos. As you can see, like, even yesterday I was doing these editings. Okay, what do I mean by editing is, let me actually bring that original on. I don't know, like, let me just bring this on. The audio here, you can see the audio spikes. The editing I mostly do is I just adjust the audios. Okay, like the levels I can adjust with the audio compression and some little bit of noise removal, things like that. I do mostly that, and unwanted areas I just try to remove that. Like, there are a lot of things, but I actually forgot that on my OBS Studio, the recording mode, I had my desktop audio unmuted. It's like, it was, I was watching, so this setup, I will talk about this one. Okay, this was during the silver bullet, if I'm not wrong, but I took this entry, I got the profit. That's the video I was about to edit. Okay, you can see, like, I have 2 positions on the sell short, and that's the fair value that I targeted, not this or anything else. As you can see over here, yes, I targeted here instead of going higher, because there is your BPR or balance price range, and price went and tapped into that. However, I said, like, this is how I journal. Okay, this is how I journal. I will show you this setup. Okay, so it was on Tuesday 7th November 5:00 a.m. Let me just write down the time and date so that I can go and talk about this one as well, if you guys want to know. Tuesday. Who the fuck is messaging me on my Facebook right now? This is disgraceful. I already, let me just like, mute my mobile phone. It's disturbing and distracting me. So sorry about the bad word, but it is what it is. Okay, because people who know that I'm gonna do live, they shouldn't be sending me messages on my Facebook. That's the problem. That's a huge problem for me. So let me just quickly put my phone to the silent mode. Okay, so while doing that, I actually bought my cup of coffee with me as well. So yeah, anyway, so Tuesday 0507 on 7th November, I'll talk about this, but please remind me about this entry as well. Was it me? No, Murad, bro, you are all good. It was not you, because your text was before the stream started and you are looking for my stream. So thank you for reminding me, because I was actually planning something today, and during that moment I actually didn't look into my current time, and that's why I'm late to start the stream, but I hope it's not too late for you guys. Anyway, so what happened during this moment is, let me just show you guys what actually
Walker and Maxwell's equal to it.
I hope you got the point. I was watching the Australia versus Afghanistan, the cricket match, and the bloody trading view, it recorded all those cricket commentary and all those noises over there instead of what I was trying to say during my trade execution. So as a result, I need to do a lot of editing, and when I saw that, I literally, you can see like this one, I don't have that recording here anymore. Okay, I don't have it anymore. No audio spike, because I removed the entire audio, and now if I do the analysis or other things, I have to actually do again the voice narration, and since I did it live, I had a lot of information over there that I currently cannot remember. That's why I stopped editing the video on, like, I added it here maybe 2 days ago. Okay, since it's already 10th, so yes, after the trade execution, after the match finished, I wanted to edit the video, but it was already like heck of night during that time. Anyway, that's one thing that I'm showing, like I'm not getting enough time. Okay, so that's a very very big issue for me. However, Taran trading, how do you know if the trend will continue even with valid FBG and displacement? Okay, brother, so you see here, I put a simple placement. Okay, I was at work during this moment, I didn't enter into any trade, but I just put the high and the low as my alert on the trading view. If you're here from the starting, you saw like I removed 2 alerts from here. That was what I did, and that was what I was targeting, okay, at the first place. Now how do I know is, this is where your on my first stream I already talked about this, guys. Please let me know who here is watching. So let me go to the daily chart one more time. If you are here from my first streaming, you know how I showed you guys that how I personally mark my draw on liquidity. Okay, and one more thing, you are too messy, bro. I wish I'm messy. Okay, I'm messy of the trading. If I was messy of the trading, then I might had the life, like I might be the best trader on earth, right? Like Messi is the best football player. Anyway, I wish I was Messi. Anyway, now let me talk whatever is happening here. Okay, let me do I want to hide or delete? Let me see. I want to delete actually. I don't need those. I can just simply go. So I was talking about this from here. Okay, let's talk from here. And if you are here from the very beginning of my live stream, you know how I draw the liquidity. I draw the liquidity on previous days. The higher you go, it's more accurate or more consistency you can find over there, but I'm just going from the daily, since it's only 1 week after I talked about my drawn liquidity. Like on the weekly it will be only 1 candle. That's why I'm not going to the weekly. Okay, because during this moment I was expecting a bullish run. That's what I'm saying for a long time. But also I said, if I see the candle is closing above the previous day's high, I'm gonna continue for buy side until I see a sell side delivery. Now you see on the daily I have some relative equal lows over here. Like this is the lowest that price reached during these days. But let me come to this point after explaining this run for one short time. Okay, what I do is I look at the previous day's opening and closing, and at this area I was expecting that price gonna go up higher. Okay, so let's do some market analysis. Let's see what happened. So this is a relative equal lows inside of some daily fair value gaps. Let me go to the other chart, because on the ES it will be even easier. Okay, so this is your fair value gap that price came into 50% level, then it started going up higher, taking all these liquidities. Like every single candle's low has liquidity, but especially this swing low. Okay, now if you look into the chart, if you want to draw your premium and discount, things like that, you see this equal lows, let's say from here. Okay, let me just draw a box from here to here. Price came into the discount here and now it's going. Why I'm targeting here is because that's a very major swing low over here. Although I want to draw from here, but I'm drawing from here. Still price came into the discount area and now it's going up high. That's one thing. Another one that I can draw is from here to the high. Now you see, like, it came to the extreme discount level, took all the liquidity, now it's going up higher. But this will create conflict between people and this will confuse you. Anyway, I'm talking about this area. Let's talk about this area. You see, like, I have explained this a long time. What happened? Price closed above, took the liquidity, closed above. I'm expecting a higher run on the next day. On this day, price did that. Okay, let me actually put it into the reply mode so that you can actually understand what I'm saying here. Ignore all the drawings. Okay, I'm gonna remove all the drawings. So from this specific day, I had a bias that the next day could be a like, I'm expecting a green day, as simple as that. On this day I'm expecting a green day. Now why I was expecting, I already told you, it's coming from a daily fair value gap and after taking some measured liquidities from the left. Okay, this is a very important level for the price. Every time there is a swing low that price took, like here, okay, price is coming down, coming down, coming down. Here what happened on this day? It took this liquidity inside of this fair value gap. It gave you a green day. It failed to close above, so again started falling until where? You look on the left, it retraced. Yes, this retracement is expected, so not every day, and this is like, you cannot be right 100%. I talked about that as well. So measure liquidities, it's giving you green day, as simple as that. But I'm not expecting 2-3 green days. That's what you need to understand. I'm not expecting green days like this. Why this happened is because price took the liquidity, failed to close below. It should take this liquidity. Now it took the liquidity where? On this candle. This was the inside candle. What did I talk about? The inside candle. Inside candle is what? That doesn't take the previous day's low or high, like the liquidity from previous day's low or high. Now price first came lower, took the liquidity from this inside candle. It didn't take the liquidity from here. As you can see, it didn't take from here, it took from here. It failed here, and also it closed above the previous due liquidity that was due. Why? Because price here took the liquidity, failed to close. Now this one closed above, so my next day's bias was price gonna go and take this highest point. Price took the liquidity, closed above. It worked like this. Now from here what happened? On this day it closed above, but it closed above, so the next day my liquidity, drawn liquidity, was here. On the left I have this huge fair value gap. What sort of fair value? This is a bearish fair value. Bearish fair value, what it does? It acts as a resistance. Simple. I'm trying to make things simple from you guys. Try to understand, try to catch this. Why I'm saying this is because you don't need to do a huge amount of analysis. Yes, if you can, it's good. If you have the knowledge, if you have the idea, yeah, it's definitely good. But I'm here to teach the way I trade, and that's what I'm here to show you. Okay, so there is a fair value gap, there is another fair value gap, two fair value gaps. Some people calls the top one as their breakaway gap. Okay, there might be definitions like that. For me, this is a measuring gap. Why measuring gap? If I go to a higher time frame, there will be only one fair value gap. Okay, you see the fair value gap, the two turned into a one fair value. So that's what I'm saying. Like, for some people it may be different, but for me it's measuring gap, because that's what ICT said. I showed you already. However, you are here to learn from me. I'm showing you my point of view, my setup, the way I look into the chart. Okay, so here price closed above, that was my target. Price closed inside. okay, this is also inside, or even if it's not a inside, it took the higher liquidity, as you can see. Okay, it's like just a peep, but what happened, it failed to close. Now what I can expect, I can expect price to go lower. But why I'm expecting this, there is a bearish inversion, there is a bearish fair value or sell side imbalance, buy side inefficiency. Okay, so I have some sort of confidence that market may react from here. So when price reacted with this candle, I might be little what it calls, little considerate towards some buy, but still my bias was upside. Okay, I don't know if it's the bigger one is the high probability FBG. Bigger one is the high probability. Not really, because if you look here, let me draw some chart or line. This specific one was aligning beautifully with the optimal trading zone based on a higher time frame. Okay, but why price came to this area, you have to look on the left, like why price respected this. Yes, it could have gone to that, I cannot guarantee you that, but I was not expecting, like I don't need to consider the fair value gaps in that way, that bigger one is the high probability or smaller one. Yes, if you have some sort of fair value that you cannot see without like zooming in too much like this, then yes, the bigger one is the clear one is the high probability. I can talk about that, but let's see what sort of area the price is reacting from. It didn't go to my OTZ, optimal trading zone, if I'm trading on a daily time frame. Okay, but you see this premium, this discount, and what is this, this is called equilibrium or the balanced area. Okay, this is the balanced area, price went above that, and I'm going to talk about this as well. Remind me, please remind me. Okay, and when price is, what I'm expecting is a sell off. Okay, first thing first, market is on the bearish side. Okay, market is on a bearish order flow, and I'm expecting a sell off overall. Okay, that's my overall bias, but during this moment it's above the 50% or 0.5, the equilibrium. From the moment price went above this equilibrium, I need to look for some PDRs. Okay, some what it calls, some PDRs. The arrays can be, you know, like old high, old low, then rejection block, then fair value gap, then liquidity void, bearish or bullish breaker, mitigation block, a lot of other things. Okay, you cannot find everything in one place. Now high probability, let's talk about high probability now. Some people, they don't even use this, okay, the premium and discount array, but I'm gonna talk about this a little bit. On the left, if you see what happened right around this area or this swing high, is this a swing high to you? Okay, is this a swing high? Yes. Is this a swing high? Yes. Is this a swing high? Yes. Now what happened around this area, this is a daily chart, remember. Okay, price took, I'm gonna mark the until this one, because that's the, like, that's a better swing high that price took the liquidity from. Or if you want, you can mark this one as well, because that's also a swing high. This candle's weak. Okay, so I'll just go here. You see, like, it went little above that area and then it started selling off one more time. Now why I'm saying this is because I will give you the rejection block. Should I go to the rejection block first, because you need to understand this thing as well? No, let's just finish this one. Just remind me to ask the questions. Okay, remind me. You see here, that's a swing high, that's a swing high. Okay, inside I have two, what I call this, inducement. Inducement means there is a swing high here that is lower than the previous swing high. It's generating liquidity. Price came lower, created another high that is lower than the previous high. It's another generating like more liquidity around this area, and then price came lower and then started going up, took all this liquidity with a previous swing high as well. Okay, if price didn't reach until this point, I would look for this as my liquidity and this is the inducement. It can be one or two, it can be multiple, it can be a single inside of a liquidity run. Okay, now inducement, you don't need to like, let's finish this part first. What happened here? Okay, there is a high, there is a higher high. Okay, or if you want to take this, there is a high, there is a higher high. Price came the lowest to this area. Okay, this is your lowest area here, and then it created the high. Where is your bearish order block, bearish breaker block? What is your bearish breaker block? It's the lowest down close candle. So this candle is your bearish breaker block. Why I'm selecting this candle is because you can see there is a small little gap over there. Now let's see how far price came in terms of this bearish breaker block. Okay, I'm gonna mark that one, because if it tapped here it would be great, but I'm gonna mark the entire candle from high to low, and that breaker block is aligning beautifully with your fair value gap as well, that is here. Now this fair value gap is also aligning with your breaker block, but why I'm not expecting price to go that higher? If it went, yes, it still could be a better option, but let me talk about the things over here. If it goes around this area, still it could have been a better option, but the entire block here is your bearish breaker block. If there is a set of candle, that can be your bearish breaker block. Now if you select this one as a wrong breaker block, okay, let's see this one. I'm not saying that it's working, because it's wrong, it's not the lowest down close candle, but since that low is covering this one's body, that's why I'm just marking this one. Okay, price went there as well, because that's a high, that's a low, that's a higher high, but since price took liquidity from this area, I'm gonna mark from here to the lowest to the highest. So this whole thing, I hope, hello the zero bro, how are you, welcome to the stream. I hope I'm not making you guys bored or confused. So what I'm saying here is, if I see it's respecting, like price is respecting this bearish breaker blocks or the breaker blocks lower part, that's even a better indication that market gonna go lower, and also that aligns with a huge fair value gaps 50% level. Like see how it respected that area. Now I'm seeing the chart, that's why I'm saying it. But what happened is, during these days you already saw the rejection from the fair value gap. It tried to went up higher, it came lower, closed, the day finished here. The next day there was a volume imbalance, maybe a new week, no new week, but new day, like new day opening gap or something. During this area price went above, again came lower, and eventually it came lower. So it's showing pure rejection from that area, and it actually traded from that low of the bearish breaker block. I'm gonna come to this. By background color change karo, feel like background color change. So you want me to change the trading view background color or what? I didn't get your point. If that's the thing, or the color here of this thing, because it is not the color I usually use, but let me put something like this. Okay, and let me remove this one. Tell me which color you are talking about. Okay, because I just put something, I was marking something before, that's why it took that default color. Okay, so this specific candle, what happened here is price came, respected that lower part. Okay, background color. Okay, so canvas, what is the canvas? Let me make it little more darker maybe, because I have to change candle color maybe. No, not the candle color. Candle I'm not gonna change by any mean, because I don't want to see any sort of red over here. Okay, I'm sorry if I'm making you bored or something. Okay, but if I want to do anything like that, I need to set everything in a different fashion. So that's why I have it like white or something like this. Okay, I'm sorry if it's making you, I don't know, like should I change the back? Let me see, like if I have any, which one I'm using right now. PG, what is PG? Purple and green. White is nice. Color blind. Okay. White is nice. White is nice. You guys want to see this background? I don't know what sort of background I can put. I'm sorry guys, cause that's what I'm used to. Okay, that's why I'm using something like this. I hope that's okay. Okay, anyway, let me finish this part. Okay, the color is not that important. So what I'm saying here is price respected that area, since the fair value gap here is aligning with your the breaker block is aligning with your fair value gap. Drawing small white, drawing small white. Anyway, let me keep it like this at least. Okay, because now it's making me look like a color blind because it's so washed. I'm sorry bro, maybe next time I will build another one for my live stream, maybe the one with black background and candle in a different color. Anyway, let me talk about this area. Currently price is around that level again, but let's talk about this. So this fair value aligns beautifully with that breaker block. That's why price I'm expecting. Where am I right now? Daily? Yes, I think daily will make more sense. Okay, so that's why I'm seeing like price to react from that area, and that can be my higher probability fair value gap or something. Okay, when the breaker block creates it, that becomes your high probability. Anyway, market coming lower, whatever happened here around this specific area, price took the liquidity. It's okay, thanks. Okay bro, I'll try it on the next time. Okay, on my next stream I'll try to change the background, because I know looking into some white background it may cause your eye damage or something. Same thing with me as well now. That's why I didn't put the exact white over here. I put one little darker than the white one, but I'll try to create some custom ones and then I'll use that one for the next one. Anyway, for now keep an eye on this area. Okay, so daily actually refined that order block even better, and now I'm expecting price to take this liquidity and finish its unfinished business that happened around this. Okay, why I'm expecting? It can happen, I don't know, it cannot happen. It completely depends on the price action that I see on the next few days. But here what happened, price took the liquidity, failed to close above. Now this was my target, price took the liquidity and it closed below. Okay, here it closed below. Now this is my target and price started going up high. This day I lost. I told it already, this day I lost. Now it took the liquidity, it failed to close above one more time. What happened during this time? I had this area as due. Okay, I had this low as due. Price took the liquidity, failed to close above. Then the next day what I'm expecting is price to take this liquidity, since it's the immediate next candle. Price took the higher liquidity one more time, it didn't take the low yet, so this is my next due. What happened on the next day? It didn't take this day's high. Did it take it? No. But what it took? It took previous day's low, the other due and the other due. But since it closed below the previous day's low, my expectation is the next day price gonna go below this. Okay, let me remove all the drawing one more time. So price gonna take this liquidity. It took the liquidity, close below like this. It's going on. Okay, here what happened? Price failed to close below. So my expectation on the next day to see price taking this high. Price took that high on this day, failed to close above. What should be my next target? The low. Price came lower, took the liquidity, close below. What should be the next target? Low. Price took the liquidity, close below. What should be the next target? Low. Now on this time This is where little bit of your, as I'm saying over and over again, this time price took some major liquidities, and here it's also, let me see if it's for contact adjustment or not. Yes, now it makes sense. Anyway, so here as you can see, it took major liquidities from left and came inside of a unfinished business, like it just created that fair value gap, respected the midpoint, closed above the midpoint, and during this, like since it took the major liquidity that it was supposed to take during this day, I was expecting a higher move. It gave me the higher move. Maybe some people may call this day as a gamble. Let's say I won the gambling, okay, because I already saw this sort of things happening over and over again. You see, price took that liquidity from here, it gave me a higher move, and that's why I'm saying, like, whenever there is a swing low or some sort of major liquidities that price took, it gave you a higher move. That's also coming from experience. If you are looking into chart, if you are looking into different time frames, you will find those things. Okay, let's make a trading firm, guys. The breaker block is the confluence of FBG that made it high probability. Exactly when there is a breaker block that is aligning aligning with your fair value gap, that is your high probability breaker block. Also remember, where is this one and this one sitting at? It's sitting at the premium area of this move. Okay, let me show you one more time. You see, it's sitting above that. You see the low of that fair value gap, it's exactly on the equilibrium or the 50% or the midpoint of this entire move. It came into the premium. It can go higher. I'm not saying it cannot go higher. Okay, there are so many things that you can consider. It can go higher, but it didn't go higher this time. Okay, I will talk about the rejection block. Okay, remind me about that, cause I like the point I marked from and the low I selected, there are some things that called rejection block or rejection area. I'm gonna give you guys some idea about that as well, and you will find something new. I was about to make videos regarding this to make things easier, but let's see. So here it took the liquidity, closed above. Okay, zero high by high speed and low resistance liquidity run, discuss 10 minute high speed and low resistance. Okay, I'm gonna tell you that. Just give me like, let me finish this area for maybe 1 or 2 minutes. Like I'm gonna finish it right now. So yes, what happened here is price took the liquidity, closed above, I said on my stream that until I see the bearish reflection, I'm gonna continue my move with my higher like what it calls upward direction. Okay, like the bullish direction. Now let me remove this as well. What happened in this area? I'm still expecting price to go higher, right? What happened here is price didn't take, it's a inside candle, but still if you see, it's a green candle. Okay, so let me just go to the reply mode one more time. Let me hide this. Okay, so on this moment price didn't take any liquidity. What liquidity? Previous day's liquidity. Okay, so this is my new day that I'm gonna trade. My bias is here. That's the low, that's the high that I marked. Now I'm expecting from the price is it should go and take this liquidity. Doesn't matter on this specific day where it closed, because if it closed lower than that, the next day I would target this. Okay, since it closed inside, I'm still looking for this to be taken because it is now due. Okay, so let's see if that happened or not. See, price on the next day, it came very close to take this liquidity, where it didn't take the liquidity. Why? It can take, I'm not saying it cannot take this liquidity, but why it didn't, like why this is my higher chance that it gonna go towards the upside than the downside, because that's what my previous days are telling me. Now it closed above. What is my next day's target? This one. Okay, So regardless of candle color, I'm not talking about the green color, blue color. If you remember from this side, that's the exact same thing. That was my target for Tuesday, Wednesday. Okay, so that was my target for Wednesday. So let's see what happened on Wednesday. Price took the liquidity, failed to close above. Now today is Thursday, so this is what I'm looking into, and why I'm looking into this is on the daily I have some relative equal lows also sitting here. Okay, and you see like so many fair value gaps that price created, and it didn't retest any of the fair value gaps. So I'm hoping that market may reverse from this area, although reverse means like it can come to retest some of the fair value gaps, although I don't think market is done with its upward moves. Like it should grab some of these liquidities and then it should come lower. Now if market wants to respect, this is the area I'm gonna look into. Okay, this is the only area I'm gonna look into, not even the liquidity, because this is where market came and it started showing some sort of reversals. Okay, I'm still not confident that, since the day is a very small day and there are so many areas for price to go, I'm not confident that that is where market is reacting or rejecting until I see at least one fair value gap is disrespected towards the downside. As simple as that. But what can happen? Price can come, grab this sort of liquidities. It's not due. Remember, it's going high. It's not due by any mean. The only due I have is, let me just make the chart clear. This is what due for now, and the area that I'm looking into. Okay, this is what I'm looking into, and this is what the due area is. But since I have some relative equal lows here, it can come here, and since I have the fair value gap sitting right below that, it can come and retest that fair value. It can come retest this fair value also. I don't mind, because I have volume imbalances over there as well. Okay, so all I need to see is where today's candle closes on Friday, what happens in the market. Okay, that's what I'm gonna look into. So this is where I am expecting today price gonna go towards, and so far, even if it doesn't grab this liquidity by the end of today, tomorrow that gonna happen. Nova Gaming, new subscriber. Hey brother, welcome to my stream, Nova Gaming. Thanks a lot for subscribing to the channel. Okay, another one. What happened? Oh shit, I have my streaming running in the background as well. Let me just, sorry guys, let me just remove that. I don't know, where is it? Do I have any place where my stream is running? I cannot see. Anyway, let's focus, because it shouldn't give me 2 times of the alert. Okay, so let's focus on the stream. High speed and low resistance. Okay, yes, I'm gonna come to that as well. So yes, what I'm saying here is, it took the higher side. I'm expecting it gonna take the lower side as well, and depending on where this day close after taking the liquidity, that's where I'm gonna focus. Like that will be my direction, as simple as that. Okay, that's my daily thing. And now let's talk about, let me go to 15-minute chart and find some good examples for you. Let me find some good example for you. Okay, or maybe on the daily as well, I can actually look for that. Now what was high speed and low resistance. Okay, high speed, low resistance, high speed, low resistance. I think I can give you some idea around how far it came here. No, I need some. Okay, let me draw some. Okay, let me draw some, and then I will actually try to find it on the chart as well. I have seen some, but let me draw some. So when you will see, I need thicker lines. Okay, so market always creates this sort of a structure. Okay, it's going up higher like this. Now since I'm drawing it quickly, don't think like it gonna come this low every time. Okay, sometimes it gonna respect the previous highs as well. Okay, it gonna respect the previous highs, or it gonna come to fix some imbalances. Now there will be market structures like this. No matter how people teach you, okay, I can give you the reference of this thing from ICT as well. Okay, so let me show you this. Okay, so when market is going like this, it's consistently and constantly creating your area that people considers as your major level of support and resistance. Everything is actually support and resistance based. Even ICT concept, it's also support and resistance based. I will give you a lot of other things that will blow your mind. However, let's say this is the support area that price supported, or resistance area that price found resistance, came lower, reacted, finally it went up. In between a lot of things can happen, but I'm talking about the major swing highs and lows. Okay, on the higher time frame or even lower time frame, whatever time frame you are looking into, when price is creating these sort of areas where it's finding multiple support and resistance, okay, major support and resistance on its way up, on its way down, we expect, this is a, I'm showing you the low what it calls, this is the high resistance. Okay, I'm showing you what you asked, it's the opposite I'm showing you, then I'm gonna, like, you will find your answer as well. So when this sort of a structure market is creating on its way up, when market comes down, it mostly it reacts from here, it gives you a move like this, it takes this liquidity, gives you a move like this again, like this liquidity grab can be on top of this area as well, like it finds resistance on its way down, things like that. Okay, it gonna come like this, since it had a lot of areas that acted as a support and resistance, market gonna do the same around that area as well. Okay, this is your high resistance liquidity run. Now you will, the less a structure you can see in between a run, the higher speed it gonna come to the opposite side for the liquidity run, as point. Okay, now why I'm saying that sort of thing, let's find something, you see this area. Okay, I'm just out of whatever I can see, I'm giving a short example. Price from this to this, okay, in between, yes, there are some other areas as well, but I'm showing you the major highs and lows. Here only 2 candle pullback, it went up, there is a little bit consolidation, went up, but this is a good pullback. Okay, if you consider the pullback, let's see if you want to measure the pullback. Okay, so how far it actually retraced. Now look, that's your swing low here, that's your swing high. So one thing you need to know is the what it calls, the discount and premium or PDRA, how people use that. Okay, it use where market impulses. Impulse means it gave you a move up, it retraced, again gave you a move up, retraced. Every single move you have, like every impulse, I hope you are understanding that. Like when you look into a heartbeat sensor, how it goes like this, then come here, then ticks like this, comes here, ticks like this, something like this. Okay, that's how the heartbeat impulses. Okay, sometimes it's too high, sometimes it's little low, that depends on what situation you are looking into your heartbeat. Anyway, so this is the impulse. You see price came to the 50% and below here. If you look from this swing low, and this is the impulse as well. Why? Price from a lower point pulsed towards the upside, and then again dropped or lost the pulse, then again dropped, things like that. So here you need to look into the premium and discount from here to here. It came to the equilibrium, then started going up. Any move that you are looking into, okay, so impulse this is impulse, price lost its momentum around that area. So it's a daily. Why I'm showing you this is when on a higher time frame you are looking into something like this, okay, then on the lower time frame it will make more sense. You see, price impulse like moved violently towards the upside, consolidated, but during that consolidation it came inside of that area. Now this is not a clear impulse that you can say, okay. So in that case I may consider like going from here until this area, because there is some good sign of price, you know, losing its momentum and coming lower. Or I hope you are understanding this. So when price was impulsing, okay, this is why I took like this low, this high, this like this. Now look, when price tried to go down, what it did around that area, okay. So from here to here, let's see what price did around that area. Did price came lower, took the liquidity, went higher first, then came and break that area? Yes. Like however you want to mark it, you don't want to mark from the high to low, let's mark from the last, at least the last candle, okay. You see price came here, found resistance, went up, came down, found resistance, went up. Why here? Why not around this? I hope you are getting my point. You see the move that I draw, that happened during these moments. Price found that, price went up, came lower, found around this area. Why around this area? You see there is a high over here, swing high, and then market retraced and then went higher, took that liquidity. This area price found some. Now there are fair value gaps as well, okay. But what happened with this week? It didn't grab the liquidity from high. You are thinking like that, right? But do you know how the rejection block works? Rejection block is the candle with the highest wick. You see the candle with the highest wick, regardless of color, doesn't, you don't need the color, okay. If you need to know it from me, understand it from me, okay. This is your swing high, that's the highest point price went with its wick. Remember this, the highest point that price went with its wick. From the body, it can be the closing price or the opening price, depending on what sort of candle you are looking at. If you are looking this as your rejection block, okay, if you are looking this as your rejection block, let's say this is a green candle, so what part of the body is this? This is the closing price, right? This is a black candle, what part of the body is this? This is your what it calls, so this is your opening price of this candle. So from this to the highest point, this specific part is your rejection block. When the next time price comes inside of that area, but it doesn't take the liquidity and violently goes and closes lower, okay, it closed lower, it created a fair value gap, market came, retested that fair value, then it continued its move. Same thing, if you look here, price came violently there, the next candle came lower, it came lower than that as well, again came lower, it started opening, okay. Why it's delayed like that, I don't know, like if my stream is actually delayed or not. So it came lower violently, as many time it went there, it came lower violently. You see this high, it came rejected from that block one more time. Now I'm not saying every candle like that you are going to use, you need to have some other confluences. That's why I kept a specific video, like I planned a specific video regarding this. I'm just giving you some sort of idea. Now this is your swing point, right? That's your highest level that price reached with your wick. From the closing price to that wick, look what's happening around that area. Price, this one, it didn't arrive until that area, it started coming lower because of the order block. That's also your order block, that's your bearish order block. So if you draw like this, you will see like it's rejecting from the order block. But what I'm saying here is, if I don't want to calculate this one because I wanted to see this wick going there. it respected the order block, it came lower. That's a good thing. Also there are some fair value gaps as well. If you see, like, yeah, it's a small one, but why I'm showing you this is because this part of the candle, it went there, immediately it came lower. Okay, even if you consider this one as well, what's the PDRA up there, right? Okay, premium and discount. If you look into premium and discount, that's your premium and discount. It went to the premium, then came, and the PDRS, what this, okay, what this candle is doing, this specific candle, this is a green candle, although there are lots of wicks over there, like a huge amount of wick over there, but this is a green candle, upward candle. What this candle did is it took the liquidity from some swing, like major liquidities, right? It's a daily candle, so this swing high until this low. Where is this low happening? It took the liquidity from left, then market went up, created a low, came lower again. It took the liquidity from left, from previous lows, it came up, it took the liquidity, the move that took the liquidity, it took the liquidity there as well. And also if you look closely, you have your fair value gap that market reacted from when it's coming down and grabbing all these swing lows or the liquidity from the left. So this area is your form of what? This is a bearish fair value gap, it's your resistance. Okay, also the previous high was here, that price took liquidity from. So in my channel you will find where I talked about the order block, and I clearly mentioned over there it can be on a higher time frame, what it calls fair value gap, or from a support or resistance level, depending on if you are looking at a bullish on or a bearish on. So in this case I'm looking at a bearish order block, so this is going to be my resistance in the form of previous liquidity level. Okay, it's coming down from there after taking that liquidity. So this whole candle from high to low, this is your order block. Is it clear? This candle didn't go to that level, this candle didn't go to that level or that level, but this is the only candle, also green color, that went to that level and that fair value gap on your left. Okay, it went there, so it made the criteria for being your order block. Let me remove this one. Okay, since it's coming down from there, now this candle became your order block. Similarly, it's going lower, it took the liquidity, everything. I hope this part is clear to you guys. Now here price is exactly doing the same thing over here. Okay, this is your highest swing point that you can mark. This is why I marked this one. It came there, reacted or respected that area, came lower, it came here, respected. Now why I'm not expecting to price like respect this area for longer term? Because it came so close to take these liquidities. If it wants to go lower, I'm expecting that it gonna grab some liquidity from this area and then it gonna come lower. Also, as you can see, price took all the liquidity from left, from this fair value, but it never came and rebalanced this fair value or refilled this fair value. Okay, so let me remove all other fair values that I'm marking or areas. This is the fair value that price never came. It came to this fair value, it still has some open area like this. Okay, it still has this much of the fair value open. Don't get me wrong. Okay, by open, that's why I'm not looking into this fair value anymore. I'm looking more likely to this fair value, and I'm expecting price to come and take these liquidities and then maybe respect. If it wants to continue lower, it may respect this fair value, and this will turn as my inducement. Remember inducement here, similar thing I'm expecting if it wants to go lower for more liquidities like this. Okay, but I don't know if this is a move or not, because if you look how far price came, this is how far it came. Now if you don't want to take this low, let's take this low. How far it came? It came into the discount. Now I wanted to talk about this thing, that's why I'm actually showing you all this. Okay, even if you want to take this, it came into the discount. You want to take this low, like the lowest point that price came to the highest point it reached during this upward move, still it came into the discount, and then it's reversing. So I'm not expecting a straight away downwards move for this sort of liquidity or this sort of liquidity. Okay, that's one thing. Now other thing to think about is the market disrespected so many bearish fair value gap, so many. Now if it reverses, I want to see if it's respecting the or disrespecting that. On the lower time frame you will find a lot of example like this, that market is going higher and then all at a sudden it started, what happened? Why my chart is not, am I still doing live or what? Oh shit, man, is my stream buffering or something? Okay, now I have the green signal on my OBS studio. It's 6170 kbps. Okay, you see what's happening over here. Just here, I'm not here to talk about the price action, but let's talk here. On its way up, okay, price was respecting the fair value gaps that it created. Okay, I'm just without any sort of market bias or anything. Let me just remove the reply mode so that I can show you something. Okay, you got some net issue maybe, yeah, I don't know, like all at a sudden my OBS turned into red. Shit happens in Australia, because the first among all the first world or developed country, Australia had the worst internet connection. Now let me just mark the fair value, and I will also mark the order block as well, but let me mark this fair value. Okay, and look here or here, any move. Okay, since this is a swing high, let's talk about, although price is coming from a after taking some relative equal lows over here, but still let's talk about the move that I'm talking here. What happened? Price created fair value on its way up, it came lower, it didn't grab any liquidity from left. Or if you want to look from here, let's look from here. What happened here? Price respected the bearish bullish fair value gap or the buy side imbalance, sell side inefficiency, it went higher, it again came lower, respected all these, and then showing the rejection, right? It's showing the rejection. First candle came here, second candle violently moved up, even closed above the previous candle's high. Okay, I hope you can see this. Now what I'm seeing here is market continuously creating a higher high. Okay, simple logic like that, but specifically at this area what I can see is market took some liquidity as well. I don't have any higher time frame bias, anything. I'm just looking into chart. Yes, why market had to come lower? Because there is your exact equal lows. Okay, but before that exact equal low, what price did here? It took the liquidity, it went above. I'm not saying this is the entry pattern, anything. I'm just showing you how we can be little more precise about our reactions or our entries, whatever you call it. Once market gave this one, okay, it had few other areas as well, although this fair value already provided the run and took the liquidity from here. Even if your take profit was here, you actually got your take profit right there when price tapped it. But when price was going up, it retested and respected a bullish fair value. So on the next move, when price went above, so let's say this is my liquidity. Okay, I'm just showing you, examples. Don't take it like that as a entry model or anything. it took the liquidity, it gave you your market structure shift. Okay, let's say this is your market structure shift. When price came, respected that, and when above that recent swing high, this is your break of structure. Why break of structure? Because the market structure shift is also a break of structure. It's called the first break of structure of a opposite move. Since this is not actually opposite move, but since I'm showing from here, market was coming lower, it closed lower than the previous thing, it went up, closed above the swing high, I'm marking it as my market structure shift. The first break of a structure is your market structure shift or change of character. Okay, like if price was bullish and then all at a sudden it started going lower, that's where you can mark your market structure shift. There are like other areas that where you can mark your market structure shift, but for here, price closed above this area, broke that area, created multiple fair value gaps. Now for me, okay, I'm not saying or showing any entry, but what, oh shit, what is here? Okay, your OTZ or your 50%, whatever you say, that's the only fair value aligning. That's why I'm not looking into this fair value, but let's say that's your OTZ. Okay, or even if you don't want to use the OTZ or optimal trade zone, use the premium discount. From here to here, that's your impulse, and then price is coming lower, it came to the discount, you have one here, and that's the highest possible area where the discount can happen. But why this one is better? Because on the OTZ you see it's aligning with my OTZ, optimal trade zone. Okay, so price came here, it respected that. That's what I'm expecting. Am I expecting price to respect this fair value or this fair value? No. Why I'm not expecting that is because if let's say my bias was high and there are some liquidities on the left. Okay, if my bias was high, I want to see, since I'm convinced that price is respecting this fair value, it's not gonna go lower than that fair value, and that is happening from here as well, and it gave me a second break of a structure. Let's mark it as my second break of a structure. Okay, since it gave me that, I'm expecting price to respect that. And where should it go? If you were in my previous streams as well, I said over and over again that if you see like this high did not grab the major liquidities, like in this case you had too much on the left as well. Okay, so don't just think that, and I just picked up a random spot to talk about this. So this is a high that price is retracing from, so that high, this fair value, if price respect that, then reconnection successful. Thanks a lot. Just a second guys, I just need to see the network quality. Are you guys able to hear me? Sorry, I don't know why all at a sudden my internet is acting weird. Okay, so yes, what I'm saying here is price went there, did its job. Now price, it took some major liquidities from the left as well. Okay, and then it respected some liquidities from the left as well. Okay, and then it respected some bearish fair value gap as well around this area. You have a look. If I'm not wrong, that's what it did during this move up. Now what I saw here is price coming and closing below that violently, or what it calls is displacement. This is a huge displacement candle that created your fair value as well. All okay now. Thanks for letting me know. Thanks a lot. Okay, I don't know what's happening with my internet today, especially today. And what could be my possible targets? You see here I have exact equal lows or relative equal lows. If I like look into this, is, remember this is 15 minutes time frame. Okay, so I have so many equal lows over there with a lot of liquidity sitting below that. But this here is okay, there is another thing I need to say. If I'm not wrong, this is the Asia sessions low. Okay, 6 p.m. yes, so this was the Asia sessions low that price came, and that's what I actually marked on my if I have that drawing still, paper stone US index, you see Asia session low, yeah, that's what I marked over there. Okay, let me make it larger and let me make this one larger as well, that you will see. Okay, so the Asia session low is on this candle, not here but here. Okay, and that's a low from like during that Asia session and London session, in the midpoint of those two sessions, that's a low that in London session it created equal low. So after taking the higher liquidity from the what it calls from the buy side, now it's gonna come and grab this liquidity. So that's a liquidity run that I was actually waiting for. Can it go here? It can, but high probability was around these areas because it created those lows, and those are the today's session. This is also called Judas swing. And now while I was doing this, what I said about my silver bullet setups, okay, let me, since I already saw it, I even for myself, I'm not gonna expect or accept this sort of example. But what market actually did first is it took the London sessions high, then it gave that market structure shift, then it came to that fair value, the only fair value that it created on its shift, and it took the liquidity from that lows. Okay, as simple as that. But since I'm seeing this, I'm not, you see, like I have two areas marked over here, and during this 10 AM candle, price actually retraced to that fair value, and then it came lower. So let me actually see what happened during this area on a lower time frame. Okay, on the 5 minutes it looks something like this. Let's go to the 1 minute straight away. Okay, so price didn't take the liquidity, it started retracing. So this is what I'm saying, how I mark my OTZ. Okay, OTZ, not the premium and discount, OTZ. You see, when price was here, okay, I marked it like this. Yes, I have a fair value aligning there with both of my optimal trade zones. Also, it's clearly above my 50% level as well. Now, did price reach there? No, it came lower. But did price took that liquidity, that equal lows that I marked? You see the equal low, it started from here, so like around this area. You see, like triple equal lows over there. Here you have a lot of consolidation period and liquidity generated right below that. Okay, so if I saw this in 1 minute, I might have marked it as my first target instead of that. Anyway, I have these things marked, and since it's US 500 index, it's not the future, it's gonna look little different on the other one. But what happened here is, when my silver bullet was happening, okay, market is coming lower, right, it's coming lower, it didn't take my liquidity until this pullback. So my OTZ, I'm gonna move like this. Now, did it rest into my OTZ? Let me remove this one. Okay, remember, that's my silver bullet starting. So the first candle that happened, now look, from the same high to the same low, the OTZ, it aligns how beautifully now. And where did price reach? Exactly there. Should I target a fair value here? No. Like from here to maybe this low or this low, if I enter like 10-20 lots over here, and if I try to show you guys some entry here, yes, this is a valid thing. But to me, the valid thing is this. Okay, why? First of all, how many confluences I'm entering into a trade with. It took the liquidity, major liquidities on the 1 minute. Also it took liquidity, it gave you the market structure shift, as clear as that. I don't need where is the opening gap, where is this, where is that. I don't use those. Since I'm seeing this, I already showed you that I was actually editing this video. Okay, I had a lot to share with this one. It was a like 25 minutes video. Maybe I could edit it down to something, but I had a lot to show. Like on this specific candle, Okay, is this a order block? First thing first, is this a order block? Because it's coming up from a breaker block and a fair value gap. But forget about that. Anything I wrote here, like it's not gonna respect this and it gonna go straight through that, maybe on this candle, or I wrote it on this candle. I have it in the video, I'll show you, but let me give you some example. Okay, what I'm saying here, I will give you the exact same example on the other side. Just that's why I'm saying, like, I already took that entry. As you can see here, I have the position, I have trade of it connected right there. I hope you can see my mouse pointer. I bought two, like bought means I sold two positions over there. My target was 122 there, that's why it's, you see, like I'm still marking that, but my what it calls, my take profit was 15,185 on the Nasdaq. So I will go to the Nasdaq and show you this one right after this example what I'm trying to say here. Okay, so yes, OTZ, it came there and then it went for that liquidity. But remember, like, listen to this carefully, if this pullback happened after taking the liquidity, no matter what, I wouldn't look for a sell short entry over there, even though market maybe it can go even lower. Like this happening here, yes, market can go lower more for the other liquidities that it left behind, but I wouldn't look for another short entry on this run. As simple as that. If you are experienced, you can do that. What I do usually is I only take silver bullet entries. So what happened in between, there might be lot of other things or places where you can enter, but I cannot and I don't want to enter, because my silver bullet setup is proven, that is giving me profits over the time. Okay, I'm doing this for a long time and I'm getting the profit, I'm seeing the profit. This is the pattern that I followed to pass my FTMO, not sorry, what it calls, my forex fund, and my top step account that I currently trade on. Okay, so those challenges I passed with this specific setup, and that's what I'm sharing here. Okay, I don't want to know what other people thinks in between. Yes, there will be some entry setups here. Okay, there will be some other options over there. I don't really need to look into that, because I already got, just look here. Okay, since it already happened, I'm not saying that I could have made this much money, but same thing I'm gonna show you one more time. Just look here, what price actually gave you if you entered from right there, and that's your first target. What I said about my minimum target, if I see the target is not fulfilling my 122, I go for 122. Let's see if 122 happened or not. It happened, but is there any other reason that could give me that 122? Yes, the Asia session's low, there are some relative equal lows as well. And what I told you, like, look where my 122 happened. On the 1 minute, it has this much generated liquidity, like all these lows. Okay, so I hope it's making sense. Okay, you wanna learn on the silver bullet, nothing else. That's what I'm actually trying to give you guys. Okay, and example, it gonna make sense. Anyway, you see, like those engineered liquidity, that's where my 122 happened. Anyway, it happened here, and this is what I target, as simple as that. Okay, and it would look something like this. And after getting the order filled, it took less than like 5-6 minutes, maybe 1 2 3 4 5 6 7 8 minutes. Exactly at 8 minutes I got my 122. Even if I targeted the Asia low, the exact same thing happened on the same candle. So less than 8 minutes after the order filled, I got without any sort of drawdown. Like it went, filled up my order, straight away started coming lower. But it's not gonna happen every day like this. Okay, sometimes you will have to observe or get some loss if you are not on the right side. But let's see, like why I said if you are not on the right side. Okay, this sell short was the right side to go for. Why? On the daily, what I talked about, the drawn liquidity. Okay, what happened on the previous day? Let me remove all my drawings. Price here, it didn't take the liquid. This is index, so the chart may look little different, but it created equal high. It didn't take the liquidity from high or the low. Okay, yes, this is a form of liquidity grab, but it didn't go above and then close inside. And from the previous day, that high was my target. Now price took both of the liquidity, closed above, right? What was the target? This. Now what happened here on this day, not on this candle? Okay, it's green, I don't give a damn about it if it's green or if it's red. And what I said about grabbing the liquidity from left, already price grabbed the liquidity from this high, and if I'm not wrong, it grabbed the liquidity from that high as well, or maybe it created a equal. So tomorrow you will see something like that may happen on the index. Okay, this is the spot only, it's not the future. That's why you are seeing little bit different US 500 over here. It's the US 500 index. Okay, so what happened right here? It took the liquidity, it failed to close above. Now what can I possibly look for is a liquidity or drawn liquidity towards this. And for my entry, what I said, if you are here for my from the first stream, I said like before entering into a short, I want to see my candle opens. Now this is a down close candle where the next day opens around this line. So what I want to see from this line is price first created a high. When that high was created, it grabbed like inside of this. Okay, I'm not talking about this liquidity, but on the high when that was created, I want to see something like this. Okay, a liquidity grab, a market structure shift. Did my example or the silver bullet that I just showed, did it give you anything like that here? Just look, that's your silver bullet time. Okay, silver bullet time actually started from this candle, but right before that, did that happen? Okay, you need to look for entries during the silver bullet. You don't need to look for the structures or other liquidity graphs during the silver bullet. Yes, if this happened during the silver bullet, that could have been even better opportunity to enter into the trade. Okay, but 10 a.m. to 11 a.m. your entry must need to happen during this 1 hour. If this retracement, let's say it consolidated for the 1 hour and then it came for your entry outside of silver bullet, if you are too sure about the liquidity, like this is breaking rules that I don't like, but if you are too sure, yes, you can try to go or enter into a trade with less risk. Maybe usually like I risk 1%, I can try to go with maybe 0.5%, half percent risk or something, or even less. Okay, with less risk you can still like try to enter a trade. That's up to you, I don't suggest that. But what I said is, if it happened here, like let's say this move, it gave me the entry. Okay, I wouldn't consider taking that entry here. That's as simple as that. This is high probability, and here I don't consider unless the liquidity, drawn liquidity, is still due and it's a obvious move towards the liquidity. Okay, anyway, so this area is a high resistance. You will see price gonna consolidate less on its way up to grab this liquidity, if that is the case. But my bias, since it's on the sell side, let's see if that happens or not. Okay, there will be a lot of other things. I'm not considering any trade here until it's 2 p.m. to 3 p.m. Okay, I want to see during 2 p.m. to 3 p.m. what market does. If it grabs its previous session's high or low, I can consider a trade. Or if it takes the higher time frame liquidity from the left and reacts from area and gives me a clean setup, since as I said on my previous days as well. Okay, as I said, I don't trade the PM session silver bullet. That's why I don't know how market can react during that area. Okay, although the last one, if I am not wrong, I did it during that. But let's see, because I was actually looking into the chart and look what happens during that area. So that's my OBS studio, and let's talk about the entry that I was about to talk. Okay, since I recorded it, let me give you some insights about that one as well. Okay, that's outside, and remember how many lots I took, where I took the entry, where I took the exit. Okay, it's 2 lots. Let's see on the Nasdaq. Not that. So I use 2 screens and I have extended it. Whenever I'm going towards the right corner, it jumps towards the other screen as well. That's why I clicked something, it went to something else as well. What was the date? So far I can see is 7 November. Okay, 7th November. 1 minute. Let me go from 15 minutes so that I can go for that. 7th November. Yes, I think somewhere around this area. 507 is where my mouse pointer, although the price or entry happened somewhere else. So 530. Let me go to 530. I'll tell you why I'm showing this. Okay, why? Where is the AM? Damn it, man. 7 AM. I don't have it marked here anymore, that's why I am looking. Okay, I got it here. So around this area. Now I somehow messed up my indicator. Okay, I somehow like deleted the indicator from my area, but just simply mark the 7 p.m. to what it calls 11 p.m. okay, 7 p.m. to 11 p.m. this will be your Asia range if I'm not wrong. Okay, because after 4:45 candle, like this candle finished at 5, so from 6 until 2 a.m. it mostly during the Asia range, but I'm marking the kill zone. This is the Asian kill zone. Okay, if you look at the indicator, it gives you the kill zones. Okay, so here kill zones. Okay, kill zones, that's the indicator. I need to do the redo the settings because I accidentally deleted it and then somehow the autosave saved it. Anyway, what happened here, price took the kill zone, that kill zone, high to low, that high. Okay, now in 15 minutes it looks something like this, but in 1 minute, let's go and let me give you where I entered. It created low. Okay, let's start it from here. There are some 15 minutes fair value as well on the left, but it took that high. Okay, Asia sessions liquidity has been taken during this moment. Now let me mark the low as well, and I will just remove the indicator to make the chart more visible. Okay, high and low I'm gonna mark and remove the bloody indicator. Okay, it has done its job. That's how what I do with my indicator. That's how much I look into my indicator, as simple as that. Price took that liquidity. Okay, on its way up it created this fair value, respected straight disrespected straight away. However, you see this, that's your swing high as well. Within that range it took that, that's your swing low, it came lower than that. Okay, I can consider this also as my breakup structure or market structure shift, however you want to mark it. Now there are some other confluences, don't get me wrong. If I'm not wrong, I have a what it calls, I have a daily opening gap, or yes, something like this around that area. Yes, that's what I was saying. And also there are some 15 minutes fair value gap or order block, something sitting here. Okay, now I don't have it marked over here, but mostly the opening gap was there. If you see, like I had the opening gap marked over here as well. You see that opening gap, price grabbed that liquidity, went above that gap, came lower, retested that 50% level, came lower again. Now I hope you are seeing all this. Okay, that's what I'm saying. I don't have it marked, so now I'm just going over my head what I can remember. Now here what happened is, a lot of people may find their entry on this candle. Yeah, why I'm showing this candle? Now there is your first fair value gap also. If you look here, okay, although there is no market structure shift, nothing, but there is your first fair value aligning with your 1 minute bullish fair value. Okay, this is buy side imbalance, sell side inefficiency. This is sell side imbalance, buy side inefficiency. The common area is your BPR or balance price range. Okay, let me mark that. Price came inside of that area, rebalance that, started going lower, gave you the market structure shift. This is your swing low that you can consider from this high, this low, that high. This is your swing low. Okay, not this, and there is nothing else to mark. Break of structure, remember it's still inside of that opening gap. Okay, that opening gap here, it's still inside of that. This candle, do you remember where it came? It came to the 50% of that opening gap. Also, this is your breaker block, that's where price came and then started going lower. Now I did not consider entering here because, let's see, I said over and over again, OTZ, this retracement happened before I found my market structure shift. Don't get me wrong, okay, some people considers the week. Even I heard ICT says it's not necessary to go like it's not necessary, the body should close below that level. Sometimes week can, but what is happening, what happening is, when you consider a week as your market structure shift, you will find so many market structure shifts everywhere, and sometimes it will give you remember my drawn liquidity, right? What I said on my drawn liquidity, if the body closes below the previous candle's low or high, that's the direction price gonna go. Is that happening here? Just in 1 minute, it's not a like in 1 minute you are not gonna get high probabilities or like high accuracies regarding that, but does it happened over here? Let's see. Price took from here, price took the liquidity, failed to close above, came lower. So now this is the low that I can target. There is no weak, so that's the low that price should come lower. Okay, now price opened here, created a small little high. What I wanted to see, remember, for a sell short from the opening, it created a high. Inside of that it can happen like this. Now if I was trading in a 1 second or 10 second or 15 second chart, that's what I might have looked into this area, but I don't go to that area, or I don't trade on that charts. That's why I don't even buy that sort of trading view plans. However, it created that high on this candle. Sorry, where was I? Here. Okay, it created that high in like eventually it came lower, it took that liquidity, closed lower than that level. Now this low is my target. Price opened here, came here, it created that fair value gap, and since it's aligning with this one, that's your balance price range. The very next candle had the target here, it went, refilled that balance priced, it came lower, closed below. Same, like similarly, that's why I'm saying this is because I wanted to look that market is closing like price is closing its body with that. Now if this was your market structure shift, still you didn't get any entry here. Why? You see, like this candle didn't finish by the time it went up there. Be 110% or like be 1000% confident that this candle didn't go or finish before this happened. Why? Market went higher fast, then it closed as a red candle, or in my case black candle. Okay, this, if market did this at the last, this would have been a green candle, as simple as that. Opened here, went higher, yes, it may have came lower fast, then went higher, then came lower and closed as a black. That may have happened. Since I cannot go any lower, I don't know, but you didn't get any entry there. That's your market structure shift, as simple as that, with the body. I'm not considering the week. Okay, now price did not come to my OTZ by this swing high or this. Since there is this breaker block and a fair value here, maybe price most likely retracing from that. I don't use a breaker block like this where my swings are not that clear to me. Okay, since it's a swing high. Okay, it's a swing high, don't get me wrong, but it's not a swing high that's showing us something like this. Okay, like coming down swing, this is a better swing high. Anyway, just focus here. I don't enter into a breaker block. Okay, as simple as that. I don't enter there, I only enter based on the fair value and my OTZ. Now price didn't come here, it created another low here. Now my OTZ is shifted, still that is the only fair value that's aligning, or the balance price range is the only place that's aligning. Price didn't come there, went lower. Now where was the session low? Let me turn on my indicator one more time. Let's see, did I mark it right? That's the low over there. Oh, yes. Where is the, here I had it marked, but let me remove this one for a second. You see, this one already happened, but I saw that I still have relative equal lows here. There are some 15 minutes fair value gaps that market did not react or respect from yet. Okay, I mean this one. Why I'm looking into this one is because when market came from here to here, it didn't grab that high, it again coming lower, giving me this silver bullet setup. Okay, during the silver bullet, so I'm still expecting price to come and grab these sort of liquidities. This move upward, it didn't, like on the 15 minutes low. Okay, like most of my analysis, everything, it depends on the 15 minute. Okay, so market came here, but this is the only area where price can come, as simple as that. Although the low is here, that price took, then went up, whatever happened over there, but it didn't take this. And remember how many lots I take. Okay, here just look how many, 2. I will show you the exact setup, but I will give you like why I took 2. Now let me get back to the 1 minute and let me draw that OTZ one more time. So after this, market started shooting lower. Yes, I could have considered entering into the breaker, or maybe during this specific move down that broke below this. This is your second break of a structure, and this model is a better entry setup. Okay, don't get me wrong, this model is even better, but I didn't enter into this fair value either. Okay, let me see actually where the video is showing me. Okay, so since this is my entry level and that's where it went, I didn't enter into that, as simple. So now my OTZ became here, and now I have some areas that I can look into. I have a small little fair value over there, and since there is a buy side imbalance as well that price did not respect, there is my small little what it calls balance price as well. Okay, I didn't enter here or this order block, simple. My OTZ I shifted here, still price didn't go there. So where is my OTZ? This draw line, it's now here. And is it aligning with any other things? Yes, that balance price range is what is aligning with it. Okay, I hope you can see that balance price range from this candle to this candle. Why I'm saying this is the silver bullet, that's what I'm talking. And I already told you what I do if the silver bullet thing is not giving me entry during that period. I can consider partials as a small little entry. Okay, so let me actually give you exactly where I thought I would enter, but let's go to the retracement area. Okay, so during this retracement I placed my order here, right around this fair value, since that is aligning with my OTZ, like 6 on level and the 6 to 7 on level. So I entered into this small little fair value that also has a structure over here. I'm not gonna talk about it right now, but because I'm gonna make short videos with that one. So that is the level I tried to enter into, specifically exactly here. Okay, and the stop loss I put, instead of putting it to the 1, since price is coming from a long way down, I just, even though I don't even need to put above this high, still my internet is doing this. Oh shit, bro. I think I have to stop very soon, but anyway, so that's where I entered with only 2 lots, and the stop loss I put was around this area, cause my usual stop loss should be here. Okay, as simple as that. This one should be my OTG entry, one should be my stop loss, and like that I'm not getting anything here. Okay, like targeting 0, it's not giving me onto 2, so it had to come right now. Police helicopters rounding, circling, anything. Anyway, that is the low, it's not even giving me onto 2. That's why what I did is I just put it on this balance price range. Okay, I will give you the reference as well, just a little around that 50% area, that area, and then I targeted the swing low that was sitting right below that swing low. Okay, this is now relative equals. So let me bring this on and let me give you guys the exact view, where 15185 entry was 15212.5 and stop loss was 2325. Okay, so 2325 is where I have put my stop loss. 1512.5, yes, that's where it is, and the exit was 15185.5, 15185.5, not 75 but 5, something like this. Okay, because I wanted to keep a little buffering room for the price over there, but this was what I targeted. Now let me, why it's not giving me. Okay, so I need to exit out of my replay mode to show you, like, if I risk 1%, how much it actually requires. Sorry, if I put 2 lots, how much it actually requires over there. Okay, and if you are thinking about this little move over there, let me, before I exit out of that, let me show you that there is your BP. Why I draw from here? Because there is a volume imbalance. Okay, so I included that with my fair value, but if you don't want to add that, still you will get the tap into that area. Okay, but volume imbalance, no matter what is the time frame, you will see price most likely, you know, coming back to that area. Okay, so that's your BPR, balance price range, or you can call your single fair value, simple fair value, however you want to call it, because it's the same thing. It's like buy side imbalance, sell side inefficiency. It's sell side imbalance, buy side inefficiency, so it's providing that. So here, when market came lower from this side, the sell side inefficiency is already filled with this one. What does this one left with? Buy side imbalance. That's what price delivered here. It didn't deliver 100%, but that's what it delivered there. Maybe later on, I don't know if it delivered or not, since price is maybe trading way above that area, maybe it has, but that's what it delivered. And with this one, it still has that buy, like, sell side imbalance, buy side inefficiency here. Both are getting covered over there. Okay, although there is some unfilled area, later on when price came into that area, it covered all of those things. The price is coming lower. I will exit out of my replay mode to show like how much I actually invested during that specific entry. Okay, I hope I can see and find that. Where is it? Here. Okay, so this, I'm gonna make the chart look clean. That's the buy side, I don't need that. I will remove this 15 minutes as well. That's the liquidity. Price gave me this. Okay, it was sloppy because you know what was here during that day. Okay, I hope you know. Let me just connect the paper trading. Hold on a sec, guys. I might have my trader weight connected on the other tab that I actually had like on my laptop. So let me just disconnect that before connecting any other, otherwise it gonna give me some conflicts. So let's say that's a paper trading account. Let me set it to around 50. What is this? Reset account. Since I trade based on the 50% and 1% of that. Okay, so let's see how much it could have cost. So I risked with this trade 0.86%. So I didn't go until my 1%, or I didn't risk higher than 1% during my silver bullet. That's what I'm saying. Like here it was more obvious if you see like on the left. Okay, during this move high, where is the cleanest equal low that you can see? One is here, other one is here. Okay, and if you look on the left, there are some other confluences as well, but that's your 15 minutes fair value, and price is coming towards that. When price gave this move, if I was in the market or if I was looking into the chart anymore, I might have looked for some other opportunities towards the upside. Okay, since it's rejecting from this area, because that's what it's been doing for the whole time. Okay, it's coming lower, taking that sell side liquidities from a like major level or point of interest, like these areas on a higher time frame. It will look something like where I was showing now. I hope I can remember that. No, this was the entry. So where I was showing, maybe this, something like this. I don't know if this was the area that I was showing or not. Okay, shit man, I should have looked into the time around that level to give you the example what I was about to say. But anyway, what I'm saying here, yes, so if that is the area, you see there are 15 minutes fair value. Oh no, not there. I was trying to show here, right? This pullback. So I hope you saw the other 15-minute fair value gaps over there, so I had to maybe draw some fibs. Let's just look into the 1 minute chart. Let's see like if there is anything resting below that or not. So just for this specific part, okay, I'm not even looking into my higher time frame. Yes, I have a lot of other things here as well, like this entire week over there. Why this entire week is because that's your rejection block for this move run, and when price is going above, simply think as your support resistance. Okay, just that area. Let me remove this. The color is very shitty color. Price is going up high, whatever it is, it took the liquidity here, gave you market structure shift. Now there are some fair value gaps over here on the 15 minutes as well. You see the other fair value here, a small little fair value. That's where price actually came here. With this, there will be other fair values here. I'm not gonna go all the way down there, just keep it simple like this. So during these areas, what I'm saying here is, I'm not saying there were entries or exits, but what I'm saying here is, every time you will see a major liquidity grabbed from a major level, you will see market after grabbing the liquidity most likely reverse for the higher level as well. If it's not a continuation, like you will get your setup. Now if I don't get a clean setup, I don't consider entering into a trade. And if it's not during my silver bullet, as simple as that, I just trade the silver bullets, and I try to trade when it's aligning with my bias as well. Okay, you waited the whole time to get back the price up there. Yes, why not, bro? Why not? That's the patience you need to have. Okay, since you talked about that, let me give you something. Okay, let me just bring the video from my history and I will give you something. ICT, 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 ICT. Okay, PDRS, I think inside of this video, if I'm not wrong, this is the video. I hope I can find that specific part where he was talking about it, where he was talking here, market price, this here. You see that price and timeline that he is drawing? What he is trying to say here is, whatever you are expecting, okay, whatever you are expecting, if you don't get your setup, it's the time that you need to control your emotion. That's your trading psychology during this moment. Okay, so that's the extreme premium, that's the extreme, what it calls, discount, or premium and discount on a higher time frame that he was trying to give you here. Now when price is around this area, I'm expecting price to come lower and take the sell side liquidity, or at least it should go towards the discounted area and take some. He said, will it always go and take the lowest possible level? No, but that's what I'm expecting. If there are some clear equal lows before this low, that is where I should try to target my take profit, not the extreme level. But this one here, he's saying price is time. Okay, this is what you read and that is what you expect. That's what he was saying. Okay, price, people are still sending me skill funded traders. Okay, time sensitive magazine, just go to hell, guys. I don't know why I tried to take a challenge on that thing. I didn't even consider doing one single trade in that challenge, but now they are just sending me over and over again the marketing materials. Okay, anyway, so this is what happened, okay, during the silver bullet, that I already showed what happened during here as well. So it took the previous sessions, whatever, like if it's with the bias, it's even high probability. Okay, what was the bias during this time, this silver bullet? I don't know if you remember or not, but from the daily the bias was towards the sell side liquidity. And did price deliver that? Yes, price delivered that. That's why I'm saying, like, it's a better opportunity during that moment. Okay, anyway, I wanted to talk about the PDRS, but I don't know how many people are actually with me at the moment. Okay, premium discount thing, I wanted to talk about that, so let's make it bigger, move it somewhere here. So I think in 1 minute that's the highest area that I can go, and let me just make it even bigger. Why I'm saying this is because I wanted to make videos with these ones. I always said, like, I'm not gonna give you that it gonna work like this, it gonna work here, come here, come to this 25% or this 50% or this middle point. I'm not gonna give you anything like this. Why I'm not gonna give you? Yes, I will be here to answer your questions, but I am not gonna give you anything like this is because I want you to observe that price, why it's important. If you are looking into something from other people, or if you're looking into those areas from other people, what gonna happen in future is you are not gonna like you will not have any sort of calculation in your mind while entering into a trade. All you're gonna see is the midpoint, price is coming here and respecting that and coming lower, or price is going above that and coming lower to that upper part of the midpoint and then respecting. You want to see only that, but you will never see what happens if when price is coming lower, it's like closing below that midpoint, or it's closing around that 75% level. Why I'm saying 75% level? It's called the quarter theory. According to ICT, it's called the quarter theory. So this is your 1, this is your 0, this is 1, the whole area. What is the quarter theory? The quarter theory is if you divide it into 4 sections. Okay, if you divide it into 4 sections, this is 25%. If price is coming from lower towards the upside, okay, like this part until this mid dotted line, this is your 25%. That's your, like, above 25%, this line is representing your 50%. From here to this line, it's representing your 75%, it's representing your 1 or 100%. So this is dividing that area or range or zone into 4 different quarters. That's why it's called quarter theory. Okay, quarters theory. It's from ICT. Now I have done giving you guys the proof or the resources or anything like that. If you are trying to learn ICT, and if you are trying to learn ICT concepts that ICT himself has given in his YouTube channel for free, you shouldn't be here. First of all, you shouldn't be subscribed to my channel or looking or watching my live streamings. Why? Because the person who created this, he has his own channel where he is giving all these informations for free. Now why you are here? I'm gonna give you the easiest things that you can learn from here, like what is the fair value, what sort of expectation I can have from a fair value. It's very small things like this. Now if you need further information, further knowledge, you can go and watch ICT's videos. I don't have any problem. Now if you want to learn, you have to learn like this. And ICT told himself that I'm giving you all the possibilities or all the ways of entering into a trade. You will never need everything to enter into a trade. Yes, if it aligns with multiple of those things, that can be your high probability or high win rate thing, but you will need to master only one. If you are mastering the fair value, master the fair value. Okay, if you are mastering the breaker block, master that. Rejection block, master that. First master one thing, then go for the other. Okay, entry you can have. All you need to know is which liquidity grab you need to look into and which market structure shift you need to look into. Okay, this one thing. Another thing is at which time you want to trade. Okay, I live in Australia. New York is something that I cannot trade every day. As simple as that. I have other job to do. I have my own projects. I'm saying this over and over again. I cannot do that every day. That's why the London silver bullet is what I target the most. Okay, that's what I target the most. Now if you are not if the time of London silver bullet is not a good time for you, whatever the rest of the silver bullets are, there are 3 silver bullets. Okay, in every day you will find 3 silver bullet setups. So London, I will write like LSB. So London silver bullet, which is from 3 AM to 4 AM. Remember this is your New York time on your trading view chart. Okay, I told you NY time, set it a long ago, and almost every day that's set it to New York time. Okay, if you don't want to do that, you will be confused between your charts. Okay, because I'm gonna refer to New York time every time there is something that I'm referring. Okay, now that's London. Now New York AM silver bullet, there are so many silver bullets. Now New York AM silver bullet, this time is from 10 AM to 11 AM. Now this silver bullet sometimes can be hard to trade. Why? Because most of the time you will see there is news right before this silver bullet or right after this silver bullet. So when there is news, market gonna react like crazy during the silver bullet. Let me show you something. Here you can see at 8:30 I had a red folder news on US dollar. At 2 p.m. I have a red folder news. Okay, so 2 p.m. on, if this news wasn't there, the AM silver bullet could have been a very good thing to have. Or I didn't actually look into the market during that silver bullet because of I knew like the unemployment claims is due today. Okay, this one is happening 8:30. That's why when there is a 8:30 news red folder, market is most likely gonna move like crazy. Just look what it did during this specific area. Okay, 8:30 is around here. From here during the news time, it's like this is a 1 minute thing, unemployment, but on this candle it's a maybe here on this candle it has a week on the both side that took liquidity from the sell side, from the buy side. I'm showing small examples, but most important part happened when New York market opened. During this time the market didn't open. 9:30 is when market opened. Just look what happened from 9:30 exact. This is the candle. It went higher first, the whole market came lower, it again started going up, again coming, like it took the buy side, it took the sell side, it again went up, took the recent buy side, it again came lower. I mean, what's happening in the market during this? Okay, this is why I didn't even think of entering into a trade today, but when I saw it, I tried to give you guys some insights like how I look into the silver bullet setups. That's why I gave you the first thing and then that. Okay, so this is where people gets some crazy moves in the market. If your analysis is correct, if you are going towards the correct direction, and also like the market bias is giving you something like a downwards, you will see like this sort of move happening. It gonna take very less time to fill up your take profit. Okay, very less time, but you cannot cheat with your stop loss or take profit targets. If you see it's way lower here, you cannot go like that. You have to stick with your rule. For me, I stick with 1 to 2 silver bullet. If the liquidity is like very near to that 1 to 2, maybe 1 to 2.23, something like that, maybe, like if it's very clear and the most obvious place for the market to go, only then I try to go for higher. But initially stick with that, see how market is doing, and then you can consider that. Anyway, so what I was saying here is your silver bullet, right? Let me just make it little bigger one more time. And the last silver bullet is New York PM session, PM silver bullet. This one starts from 2 p.m. and ends at 3 p.m. Okay, so this is your silver bullet time. Maybe let me make it little bigger so that you can actually see the time properly. Yeah, so this is your silver bullet time. Okay, you can trade your Karthik. Hi brother, how are you? Thanks for joining me. Although I was about to finish very soon, but let me just talk about a few things before I go. So what we look, or what I learned from ICT during these periods, I'm gonna say and talk about that. And now this is your premium and discount, or PDRA. Okay, what is this? This is your that blue line is your higher time frame high or swing high, something like that. Okay, higher time frame swing high, this one. Now this is your higher time frame, the same higher time frame swing low. Sorry, I didn't write the high over there, so let me just write HTF, higher time frame low, and then this is your higher time frame high. Okay,